breaking 6,900 in just the last few moments, and like you just heard from Gaurang, there could be a lot more pressure also that comes into the markets, especially as China will reopen on Monday post that 1 week break. The Nifty is off 1.3%, 6881 on the index. The Sensex, the broader markets, the mid cap as well as the small cap space, all seeing this pressure coming into the markets. You have just pull up the rupee dollar for you as well, and we're seeing we'll see how the currency also reacts to the rout that we're seeing on the market. 68.4 on the rupee versus the dollar. But let's also bring you up to speed with all the action coming in from the derivative space, and Pranay here with a look at that. Pranay, how's really reacting to the kind of rout that we're seeing here in the markets?
Well, fresh shorts continue on the Nifty, and I mean, in the morning, the SGX was indicating a little stretched position in terms of a 110 to 120 point up move. In any case, the bears would be happy to take that and short from those levels. You've seen that truly playing to script. You saw a muted opening of around 40 odd points. 79.20, 79.26 is the high that we saw for the day, and after that, you saw a big fall from there. And if you take a look at levels now, we are now beneath 6,900 on the lower put protection buying. That's also going on. I mean, on a 6,800, 6,700 put, even 6,600 for that matter, you're seeing constant buying coming in at those deeper out of the money put levels. So this is really turning a little ugly. And on the higher side, you might to start possibly see some resistance at the 7,000 level. I mean, a level which was earlier being seen as some bit of a support is now being seen as might just start being seen as some bit of a resistance, because 7,000 put on last check or 7,000 call added 9 lakh shares in terms of open interest. There was some buoyancy in early morning hours where you were seeing some buoyancy above the 7,000 level and some revival beyond that, but this has given way significantly from that level, and you are seeing 110, 105 odd point downtick from that level going ahead. So what is exactly also happening is that FIIs, I mean, by the time you're closing every day, they're taking short positions. Of course, they're happy to go with those short positions, but on the higher side, they're also buying that call protection at the immediately out of the money call level. So, for instance, yesterday 6,900 was what we breached. 6,900 was where we were above on the downside. So the buying in the 7,000 call possibly coming in, but there was extreme writing at the 7,100, 7,200 levels as well. So if for instance, on the gap up, you made that premium on the 7,000 call, but that's done with after 40 minutes of the first initial move. Pull up the Nifty chart for you for today only, and you'll see that move clearly panning out. So what happens is on the gap up, you make the premium on the higher call level. So you had a gap up opening today of around 20 or 30 odd points, and beyond that, look at the kind of fall. So that lower put protection buying continues to give you premiums, while on the higher side, on an intraday basis, the higher call gives you premium, and the writing anyway is being eaten into by the bears, because on the 7,200 call on last check has added 12 lakh shares, the 7,100 call has added 10 lakh shares. I mean, these are extreme positions. There's only 1230, and the volumes are subpar. Amid that, you are seeing such a lot of aggressive writing. The index options number going ahead will become important as far as that is concerned, and the index options number will also be important to track, because that lower put protection buying continues, and the aggressive writing at the higher side has also aggravated. If you talk about the ratios, after a partial improvement in the first half of the February series, that is the first 3 or 4 days, those ratios also have taken a hit for the worse, because in terms of put buying and call buying, that has almost become double, and the call writing again has surged in that sense. The put-call ratio remains at levels of 0.78. The VIX has also spiked up significantly. Joining me now is Mithil Pradhan from Violet Arc Global Managers. Mithil, what is your view here? I remember we spoke to you around a week back, and you still had quite a bearish sentiment as far as any of your view was also quite negative going ahead. It's truly playing out now. What is your call?
See, I think we are now into a full-fledged bear market, because the only level that could have saved this market was about 7290, 7360, which has been taken out in this week. So, we will have a weekly closing below this particular level today, and because of which now we are into a clear-cut bear market. And, I was just looking at supports where the market could go, and to be honest with you, 6250, 6450 is the only level that could actually, stop this kind of a market. Having said that, Nifty for the last 12 months has been moving into a downtrending channel. If you look at the weekly chart and all, at this point of time, we are at the lower end of the channel. So, I would not be surprised if there is some kind of a, upward rally, some kind of a short covering bounce from here, because, market is clearly into a grip of fear. There is panic all around, and in this kind of panic, there could be a short squeeze. One more thing which has happened yesterday is that the BSE Mid-Cap Index and the BSE Small Cap Index both have taken out their August-September lows. Now, remember, August-September lows were very important for the Mid-Cap and the Small Cap Index, only because it has held every correction over the last 1 year. So now, if you look at the Small Cap Index specifically, it is looking really, really scary. And I also look at the relative strength of Nifty versus the Mid-Cap and Nifty versus the Small Cap. And at this point of time, it seems that a major underperformance could begin from here for the small and mid-caps. So yeah, overall, the picture is very, very bad. There could be a short squeeze, as I've told you about a minute back. But then even that short squeeze, I think, will be used as a selling opportunity. So, I am personally, when it comes to my trading, I'm looking at every rally, and I'm looking at opening short positions on every single rally.
Oh, that's quite a bearish statement coming in. Mithil, you're right. 100 to 150 point, or even for that matter, in this route, a 200-point up move will make the bears happier and give them more appetite to participate in this on the downside and make those premiums. But the call writing has also really aggravated, as also the VIX. Now, pull up the VIX for you. It is up 41% only in this week. From a level of 18.1, we've reached 25.5 only in a matter of 3 or 4 trading sessions. What is your view there?
See, volatility, if you look at the history, generally the panic is around 30 levels on the VIX. A panic level above 30 has not been able to hold in the last, 2 or 3 years. In fact, I was looking at the US VIX. It had already reached 28 yesterday. So, it is right now, when you go above 26, 27 VIX, it is a clear indication that the market is into a grip of fear. Everybody is in the panic mode, and anything can happen here. So, the second thing that I want to say is that the market has been declining from 7,500 to whatever 68, 68.70 what it has made today. So essentially the market has corrected 10% over the last, couple of weeks or so. And of course the volatility has gone up quite a bit. Now, of course, volatility will need to subside from current levels, especially if it reaches around 30 levels. You could see that market will get into a kind of a sideways mode. Having said that, overall, especially the technicals are concerned, they are clearly showing a bear trend. So, VIX and everything will be supportive arguments for, kind of a sideways move or some kind of a short covering rally. But I don't like to read too much, from the VIX charts, because, it is never too clear.
All right, let's talk a little stock specific. Pull up the BSE 500 for starters. Right now, 440 stocks of the 500 are declining in trade. The breadth is extremely adverse, and you might also be looking at certain margin calls being triggered, because the MTM has to be maintained, and you might possibly see the possibility of brokers selling the cash positions to make up for that MTM, and that can be really scary. But if you take a look at the BSE 500, pull up that for you, 440 stocks on that index are declining at this point, and some of the larger ones being, of course, it's 1.2% down. Vocart, Marksons Pharma, there's a Cox and Kings, Jubilant Foods, Sadbhav Engineering. All these counters are seeing deep gashes. Pull up any counter right now from the mid-cap space, anywhere between 7 to 15% safely with the blindfolded dart you can throw, and you'll get a downtick of around 7 to 15% on those. Cox and Kings, Jubilant Foodworks, Sadbhav Engineering, J. Kumar Infra, Jayaprakash Power, all of these counters from the infra space are seeing extreme cuts. DB Realty, Delta Corp, Alok Industries, Amtech Auto, you name it, and the floor is thrown open for you. What is your view, Mithil, as far as some of these mid-caps go? Margin calls being triggered, further risk as far as trader participants go?
Well, that's going to happen. Unfortunately, the way the equity markets in India work is most of the people are only looking at longs. I'm getting almost a dozen calls every day from various investors saying that, what I should do, and what I should do. Now, this is a precarious situation. This is a bear market. I have always maintained that the bull market, which started around March 2009 globally, is 7 years old. Bull markets do not last more than 5-6 years. It has lasted 7 years, great. It was a great party. But I think now it is a time for a major bear market. Now, if you look at it this way, every decade or every 7-8 years, we have a correction of 50 to 60% from the bull market high. Now, if you're going to consider that, then we're looking at 4,500 and 5,000. It may be possible. People might call me crazy. I do not care. But, about in 7-8 years, we see this kind of a movement happening. If this was a medium-term correction, the 7,300 level wouldn't have been taken out. Now, since it has been taken out, I have no other option but to look at a long-term bear market. I mean, this is what is going to happen. Margin calls are going to trigger. People are still going to look at bottom fishing, but it's not going to help. My suggestion is, this is what I'm doing for my portfolio. I'm looking at a SIP every 100 points fall in the Nifty, I'm adding stocks. So, this is the only way that investors can do. If they are already holding on to stocks, I would suggest them to get out at any rally or whatever they get out of the market. Margin calls, even on my terminal, I'm seeing that so many margin calls are being triggered. This is normal about a bear market. This is going to happen.
So calibrated nibbling in at those lower levels is what you're suggesting, as also a kind of a sell on rise market is what you're saying. We'll leave it at that, Mithil, for the dearth of time. Thank you so much for joining us with your market view as well as stock view for today. It's been quite a terrible first half of the session. Coming up, the January CPI is seen cooling marginally to almost 5.4%, while the highly unpredictable IIP, which is a volatile index, is seen contracting 0.5% in December. More on that when we return.
Present